So let's talk about one of the biggest challenges in finance. How do you get your own worst enemy, your emotions, out of the picture when you're trading? Today, we're going to dive into exactly that. How to stop trading from the gut and start trading like a machine, all based on some really fascinating work from Jeffrey Katz and Donna McCormick. And to really get our heads around this, let's start with a puzzle from one of the authors himself, Jeffrey Katz. He built this trading model for the S&P 500 that was right an incredible 80% of the time. You'd think he'd be rolling in it, right? But he admits right here that he still lost money. I mean, how on earth is that even possible? It sounds completely backward, doesn't it? An 80% win rate should be a one-way ticket to success, not failure. But what we're about to uncover is that the real lesson here has nothing to do with the model and everything to do with the human mind. All right, so to crack this puzzle open, we first have to understand the fundamental flaw in how most of us are wired to think about risk and reward, especially when our own hard-earned money is on the line. And here's the absolute kicker. The problem wasn't the system. That 80% signal was solid. The data was real. The weak link was Katz himself. His own emotions, the classic duo of fear and greed, pushed him to ignore his own brilliant system. He second-guessed the data, and it literally cost him. And this really gets to the heart of the matter, the core battle that every single trader faces, whether they know it or not. It's a fight between two totally different ways of thinking. Trading with your gut versus trading with the system. And this chart just lays out the whole conflict perfectly. On one side, you've got intuitive trading. It's totally subjective, it's emotional, it's driven by that gut feeling that's really just a cocktail of fear and greed. And the worst part, you can't test it. It's a total black box. But then you look at the other side, systematic trading, objective, logical, driven by rules. But the real game changer is that fourth line. It's testable. You can actually prove that it works. So Katz had this light bulb moment. He realized the only way he was ever going to make money from his 80% success rate was to take himself completely out of the equation. He had to build a system that could trade without him, without his emotional interference. Okay, so if you need a system to trade for you, how do you actually build one? Well, you create something called a fully mechanical trading system, basically a complete impartial machine for making decisions. And what does that actually mean? Well, it's pretty much what it sounds like. It's a set of rock-solid, pre-programmed rules that spits out specific orders: when to buy, when to sell, when to cut your losses, with zero human input needed in the heat of the moment. All the thinking happens up front when you design the rules. When the market's going crazy, there's no thinking, there's only execution. Now this is so important because it shows us exactly why Katz's first model failed. See, a complete system needs three crucial parts. You need rules for getting in, that's your entry. You need rules for getting out with a loss, that's your risk control, your stop loss. And you need rules for getting out with a profit, your take profit target. Katz's original 80% model, it only had the first part, the entry signals. He left the exits up to his own judgment, and that's where the emotion and the losses flooded in. So building a system like this isn't about guesswork or finding some magical pattern on a chart. No way. It takes a really rigorous, disciplined approach. You have to start thinking less like a gambler and a whole lot more like a scientist. The scientific method, when you apply it to trading, boils down to three key steps. First, you isolate. You only test one thing at a time, like your entry rule, while keeping everything else the same. Second, you standardize. You use the exact same testing method on historical data so you can make fair comparisons. And third, you evaluate. You use cold, hard statistics to measure your results and prove they're real, not just some random fluke. Because at the end of the day, the whole point of this process is to figure out what's a genuinely repeatable strategy versus what just got lucky in the past. You're hunting for something that's robust, strong enough to keep working in the future, not just one that looked perfect in hindsight. All right, so to be a trading scientist, you can't just wing it. You need the right tools in your lab, right? So let's take a peek inside the modern systematic trader's toolkit. You've really got three essentials. First up, reliable data. It's the foundation of everything. Garbage in, garbage out. If your data is bad, your tests are worthless. Next, you need trading simulators. This is software that lets you backtest your system, running it on years of past data to see how it would have done without risking a single penny. And finally, the real power tool. Optimizers. These are smart algorithms that can test millions of different settings for your rules to help find the absolute best combination. It's like a super fast way to fine-tune your trading machine. And you see how this all connects? It brings us right back to where we started. The scientific method, the back testing, the optimizers, they all serve one primary goal:
to build a system you can actually trust, so you can have the discipline to shut down that unreliable gut feeling.
And this quote just nails the whole idea. Because a mechanical system is built on rules, you can test it. That means you can find out if an idea is garbage and either fix it or throw it away before it costs you real money. And if it's a good idea, you can keep making it better and better. So, here's the bottom line. Building a great system is only half the battle. The other half, and believe me, it's the harder half, is having the ironclad discipline to actually follow it, to trust the data even when your heart is pounding and your gut is screaming at you to do the exact opposite. That is where real success is found. So I'll leave you with a final thought, and this goes way beyond trading. The next time you face a big decision, what are you going to trust to guide you? Your gut, with all its hidden biases and emotions, or the cold, hard data?